Brent Wilsey's with us, another man who makes us feel inadequate
Thanks.
because of all the stuff you're not doing with your investment.
My life
capital.
sucks day here on the Big Biz Show.
How are you, Brent? Good to talk to you, man.
Good to be here.
Hey, let me real quickly with the market stuff. I have to. I got to bring up. We've got a couple of down days here, and of course, panic sets in, despondency steps in, and then we're consolidating again. It wasn't such a bad thing to see a pullback in the overall market, especially when we had such unfettered growth over the last few weeks.
Right. And it's kind of funny, Sully, because what's happening is that our economy is doing so well, our companies are doing so well, you got to find something to bring the market down. So what it was, yeah, exactly.
Really?
Yeah, European Bank on Wednesday, I believe it was, they lowered their global forecast from 3.2% down to 2.8% because of, again, this is global forecast because of back east, the weather in the United States was so bad, hurt the economy.
Oh, that one. People didn't.
When
get
is
out
that
to
excuse
shop.
going to go away? Sometime in September?
I think so. Well, next winter maybe. You know?
My gosh.
So, but it's not an excuse. It is real. I mean, and that shows how big it was. And then also Ukraine. So they lowered it from 3.2 to 2.8%. So that kind of hurt.
That's a big one.
Hurt the economy. Yeah. And again, the crisis in Ukraine. That caused
Iraq.
problems.
The story out of Iraq right now.
Well,
Iraq,
the World Bank, they didn't lower their forecast because of Iraq yet. That was prior to. But now with Iraq, that's another thing that's going on. That's pretty serious over there. There's some fighting going on, and that hurts us. But it doesn't affect our companies here in the United States. What it does affect is oil prices could hurt the disruption of some flows of oil. But keep in mind, our Midwest oil production, our fracking and so forth.
Frack here right now.
That's right. Frack here, frack here.
It's the summer of frack.
Yes, I'll hope so.
Hey, I maintain that the most important stock in the Dow right now is Caterpillar. And reason being is that we pulled back a bit from our all-time highs in the last couple of weeks.
Right.
But if you think about one reason that I think the rally has some life to it, probably is because of stocks like Caterpillar. It's the best performing stock in the Dow this year. It's up nearly 20%. But I was thinking yesterday of all of the indicators that Caterpillar gives you. If people are buying heavy equipment, if companies are buying heavy equipment, along with new construction happening, it's an indicator of what's going on in the general economy. And I never actually thought of an individual stock like that. But Caterpillar is like one of the only stocks like that is kind of sort of a leading indicator on overall economy. Now, I caution people from owning just one stock, but looking at that stock is pretty interesting.
And you're right. I mean, it's a good indicator, and that's why I use like train companies and so forth, because as they transport more goods, that's good and so forth. But you're right, with Caterpillar, it's a good indicator. I will tell you, I don't have the numbers in front of me, but I do remember they have a lot of intangible assets and a lot of debt, which I'm not thrilled about.
Oh, I see.
But still watching their sales.
See, you look further than just that.
Well, it's true. I mean,
wow, look, Caterpillar's doing good.
Mainly because they're not only just selling big yellow tractors, they're also in the energy and transportation business as well. So you got to look at the numbers on all those things, because if they're just carrying a loss for it on the things and their stock's performing well, it's not going to perform well forever.
And just because the company's doing well with sales and so forth, that doesn't mean you have to buy it, but it means it is a good indicator that hey, things are happening, things are being built, and that's
so now
good to buy
maybe
the
houses
companies.
will go up, and then maybe stores will go in, and then people start further down the road.
Exactly. Right. Hey, what's the deal with European banks going to negative interest rates? What is that? Is that like eating celery?
Sounds like a comedy
Is that like eating
premise.
celery?
What's with those European banks anyway?
Is that like that's eating celery is negative calories?
Yeah,
there we go. Yeah.
By the way, celery is 90% water and 100% not pizza. I can tell you.
yeah. Good fiber. It's the old clean sweep. It really does for your
it's
interns.
like psyllium powder. So what's going on with negative interest rates?
Well, what's going on is that you have to look at what they're trying to accomplish here. And the European Central Bank, what they're saying is like, hey, if you give us money to hold, we're going to charge you for holding that money. You're not pay you interest on it. No. What they're trying to do is stimulate the economy. They say, banks, don't give us your money. Take that money, loan it out to stimulate the European economy and drive down the price of the euro, because they want to make their exports cheaper for other countries, and they're not worried about inflation.
They love the euro over there. Where they use it, the euro, if you try to give them a buck, they'll almost go like,
they don't want your stinky dollars.
They don't.
Yeah, they want euros.
They make you go cash
but they are trying to drive down the price of the euro, so their exports are cheaper to help.
But negative interest, it means they're paying you to borrow money? Is that what they're doing?
You pay them to hold your money. So if you have, your bank, you have $100 million.
Oh, I'm sorry. I got the other way around. So you're paying them to hold your money. Wow.
Right. So,
could that happen here?
It's not going to happen here anytime in the near future. I mean, the Federal Reserve right now, we still have quantitative easing. And with that should be done by, I'm going to say, probably the fall or so.
Yeah.
But
done? Over? No more.
Over. No more, buying back bonds
70,
and mortgages.
80 million a month or something?
Billion. It would.
Yes.
But we're down. I forget the number. We're down about 40 or 50 billion now.
Wow.
But what they're doing, and our Federal Reserve is more concerned on inflation. They're trying to keep inflation control and still bid.
We've heard so much about hyperinflation for so long. I'm not sure I'm convinced that that's even going to happen ever here. If we didn't see hyperinflation in the last 5 years, we're never going to see it.
Oh, I would never say never.
Well, we'll be dead.
That could happen.
No, well, I don't know about you, but I plan on living a lot longer than that.
Well, if it happens in the next 40 years, because we only got 30 good summers
That's
left,
right.
and maybe 5.
And this is one of them.
5 really bad ones after that. Hey, what's going on with the correction? I get more email. I'm sure you do too. About is there a correction coming? Chris Janicus, our director, Curtis Matovich, working the controls on the television. Guys, show us this picture of the S&P right now. That's probably the best indicator. If we can see the S&P, you'll see that we, technically speaking, we're above the 50-day moving average. We're just at the 10-day moving average. We're probably, overbought a little bit here. We got terrific support down in the 1880 area, which we kind of hung out there between April 14th all the way kind of the May 19th. But come on, there's so much support resistance in that middle spot there. And then we have this kind of this bounce out there based upon I don't think there's fundamental stuff that caused us to jump in the last couple of weeks.
Right, and let's, for those that don't know, a correction is a 10% drop in the market. Well, I just do not see that happening. And the market, while it's not cheap, it is not expensive either. And I always tell people, it's like a correction is going to happen, just can't tell you when. And don't worry about it. And I got to quote famed investor Peter Lynch, who, for us older guys, might remember him. He ran the Magellan Fund.
Didn't he run Fidelity?
Run Fidelity, Magellan Fund, huge, biggest fund ever, and so
Actually,
forth.
New Magellan. That's how old he is. Thank you.
Hey, now I'm not that old. But his quote was that people have lost more money planning for corrections than the corrections themselves. So, it's going to happen. Be prepared for it. We have a little bit of cash in our portfolio. If we do have a correction, we'll look for companies that are a great price to buy. We'll jump in those. But do not pull out of the market because you think the correction is going to happen.
So it's the market's fairly valued right now. Get in and hang out.
Right, yeah.
You'd always just hang out. I don't recommend anybody, recommend anybody day trades, unless they want a paper trade.
Hey, is it a good idea to say, when it gets to this amount, I'm leaving? Just because
I'll tell you my strategy. If I'm in an individual stock, which I don't have a lot of, if I'm up 10% in one day for some reason, I take profits that day. Okay. If I'm up 10% over 3 months, I probably take profits then. But I've always got a 5%. I've always got a 5% stop loss on any individual stocks I have. And the money manager.
Oh, the stop loss.
The money.
That part of it.
And then the other issue, though, I don't think the money manager. I let them. I don't get involved in it. That's why you hire a money manager.
See, and here's the thing for both of you. Like you say, well, the stock goes up 10%, I'll sell it. Well, what if the earnings went up 12%? Yeah. You sold too soon. Good example is Intel today. Intel talked about how great the PC demand was from the business and so forth. Their stock is up, I think, 6% or something. Full disclosure, we hold in the portfolio. But had you sold it, you're going to miss the growth going forward. I had many people back when I bought Intel, we bought it like at 15. People at 22, 23, sell, get out, it's terrible. Yeah. We've been collecting a 4+% dividend since that time frame. Now we're up, another 40% on top of that. So just because the stock goes up 5, 10%, look at again, guess what? The fundamentals.
Numbers, you guys.
That's right. Did their earnings go up 12%? The stock up 10%? Do not sell it. Yeah.
On Monday, I want to get you back on Monday because
numbers coming out,
or Tuesday. No, I want to give Lululemon one more day.
Okay.
See what happens. And then I want to talk. Look up stock symbol LULU. In the meantime, look at it. I want to see what happens, and then I want to talk to you about it.
Kind of like just a.
No, look at it. I don't. The question. I get all kinds of email asking if it's stretched too thin. I'm sure Brett does too. But I don't want. Let's wait one more day.
Certainly stretched
too tight.
One more day, and we'll talk about it Monday,
okay.
Tuesday. All right.
Yeah.
Brent Wilsey Asset Management. There's his website. Thank you, Brent. I appreciate it.
You're welcome.